Hey everyone, it's Tim Harstead with Kale Realty, and I'm here with Teri with Senior Reverse Mortgage Group. And today we just want to talk a little bit about reverse mortgage and clear up some misconceptions and see if they might be able to help you. Teri, tell us a little bit about who reverse mortgage is for and sort of what it does.
Well, a reverse mortgage is a wonderful, guaranteed by the government, sponsored loan that allows seniors who have to be 62 years old or older to be able to use the equity in their home without selling the home. And it has to be a home that is a primary residence and that you actually live in. And you must have at least 50% equity in the home. That means you owe 50% or less of what's available to you. Senior Reverse Mortgages is the name of my company, and we only do reverse mortgages. That's it. That's a big difference from other places that happen to do mortgages and happen to do a few on the side. This is all that we do.
So you're definitely the expert to go to that.
Well, I'm not the expert, but this is all that we do.
So you said you got to be 62. What if I'm 62, my wife's 40, 30, whatever? How does that work?
Well, that's good for you. The younger spouse can be younger, but one of the borrowers must be at least 62.
Okay, and how does it look as far as 62, I'm retired, my credit's I've been on a fixed income, my credit's sort of
Okay,
out
that's
there.
the beauty of reverse mortgages, is that it's not credit driven, it's not income driven. The main thing is your age and the asset. So what it enables you to do is to take out, if you have a first mortgage, the first mortgage would be paid off. If there's additional money available, and the older you are, the more you get. Okay, so that's a good thing to get older. You make no monthly payments at all. Okay, the house it's a non-recourse loan. The house is the thing that pays it back, not a person. That's the definition of a non-recourse loan, and that's the insured part of the loan. If it's an FHA loan, that the government insures that the house will be the thing that pays it back, that there's no personal payback. So for example, if you have a $100,000 loan and you pass, and the house is worth $200, the house can be sold for $200, and the heirs would get the difference. If the house is worth $50 and you owe $100, then good for you. You walk away, you win. Basically, that's what it is. Whatever the house is sold for that pays off the mortgage, pays off the loan, whatever's left over goes to the heirs. But remember, you don't make any payments on this thing.
Mm-hmm.
You can live in the house the rest of your life. It's very important that taxes are paid, home association dues, if applicable, are paid, and insurance. And you have to keep the property in livable condition, obviously, and you never have to pay it back as long as you live. If you stay in the house and do those things until you die, then it's paid back by the sale of the home. And your heirs can have up to 1 year to pay it back.
Okay. And so you were saying you are responsible, so you're not paying a mortgage payment, but the rest of the PITA, so insurance, if you have an HOA, things like that, you would pay.
Right. Things that maintain the property, obviously. That's your collateral, so you want to maintain the property. That's really, really important. And there's 4 different ways that a reverse mortgage can be paid. Number 1 is a lump sum. Number 2 is a monthly payment, kind of like Social Security. Number 3 is a line of credit, which is not a home equity line of credit, it's a line of credit. And the difference between the two is that on a home equity line of credit, you have to make monthly payments.
Mm-hmm.
The interest is way high. It's for a fixed period of time. But this is different than that. And the 4th thing is through a purchase, where you can actually take money out and purchase something. For example, if you have a reverse mortgage and you get out $100,000, you could take that $100,000 and buy something else with cash in the city or wherever you want to, or in Florida. You can do that. If you have $100,000, for example, let's say in your assets, and you want to purchase a home, you can purchase a home for almost double that amount by then doing a reverse on the purchase. Okay, what's another thing that I wish to address is the fact that the proceeds to you are non-taxable. It's really important for seniors because if you make a certain amount of money, usually over $16,000 a year, you don't get your Social Security if you're too young. So it's very important that you know that that's non-taxable income, does not affect Social Security nor Medicare. That's real important, okay? So it really enables you to live the life you've dreamed of.
Right.
Either you stay in your home and you can do that, or you can almost double your purchase price on something else by putting a reverse mortgage on it.
Yeah, so talk about that a little bit. Let's say someone wants to right size, like we were talking about a little bit before we turned this on. They're looking to, their home's a little bit bigger, they had their kids probably moved back in nowadays after college. And now they're finally 40 and moving out.
Okay, yeah.
What can they do in that step? Can they sell their home and then buy another one? Can you buy with a reverse mortgage, or is it just purely like refinancing?
No, you can purchase. Like I said, for example, if you live in the home and you want to do a reverse mortgage, the funds that are available to you, you can use them any way you want. So, for example, like I said before, if you get $100,000, you can buy something else with cash, okay? Or if you have the cash available to you and you want to get something that's a little bit bigger, you want to upsize, not downsize. If you want to get an additional property, you can do that with more money than you have available for you. Another thing is seniors also don't qualify a lot of times for regular mortgages because their income isn't there, or maybe there's credit issues. So again, say you have $100,000 in assets through the sale of your home or through assets, however, and then you want to meet a wonderful realtor and like you, and he shows you something for $200,000. And you say, well, I can't afford that. Well, yes, you can by doing that with a reverse purchase. Reverse purchase. And again, you make no monthly payments on that. So you can upsize. You could get 3 bedrooms. You could get closer to the lake. You could make it ADA available to you. More in the lifestyle of what you want.
Sometimes it gives you, a lot of people you talk to about reverse mortgages, and they have a negative connotation to it. What's the difference between, some of what they saw maybe 10, 15 years ago and the FHA ones now?
Well, there's a lot of myths out there. Like I said, it's an FHA sponsored guaranteed loan. And the reason that people have a lot of myths is that they always talk to other people without going to the source. Not always, but sometimes. I've heard people say that they've lost their home. They've heard somebody who's lost their home, somebody's friend or whatever. And I just want to reiterate the fact that that is not true. You will not lose title to your home. You will not lose your home. You will not be foreclosed upon if you maintain property taxes, maintain HOA, home association dues, maintain insurance, and maintain the home in a good condition, a livable condition. You will not. That's guaranteed, okay? You also hear people, I always ask them, was it a HECM federal insured loan? They go, well, I don't know. Well, someone that said they lost their home may be embarrassed to tell you they didn't pay their property taxes, and that's why they lost their home. When the taxes were solved, they lost it. But there's that kind of myth. The other myth is that your heirs are responsible to pay back anything. That's not true. Again, that's why it's insured. The home, they can sell the home if they would like, and whatever proceeds are left over, they keep. If there's a debt due, that's it. That's why it's insured. It's only going to be for the value of the sale of the home. They can also buy the home back, the heirs, for the amount of the loan. So if you owe 100 and the house is worth 200, they can buy the home for 100. So that's another misnomer. But there's a lot of things out there that aren't true, and I would totally suggest calling and finding out about those kind of things. That is a big one, and that it's taxable and affects Social Security. That is not true either. It's not true. So
a lot of myths out there, and you definitely want to get the whole facts. If someone does have some more questions, what's the best way to get all of you, Teri? 2 ways. You can go to my website, which has a lot of information on it, which is www.seniorreversemortgagegroup.com. A lot of letters spelled out, seniorreversemortgagegroup.com, or give me a call at 312-592-5500.
588-7140. It's 312-588-7140. I will run numbers for you, tell you what you could get. If you're thinking about buying another home, if you're thinking about getting a reverse mortgage, I will run the numbers for you. There's free consultation. There's no downside to it. I'll tell you the positives and negatives in your situation.
Hey everyone, thanks again for watching. My name, of course, is Tim Harstead. I'm a broker with Kale Realty. If you have any questions on buying or selling real estate in the Cook County area, give me a call, 773-547-1546. Please, if you know anyone that this interview might help, pass the video along, share the links, give it a like. Let's make sure everyone knows that these products are out there to help them, and that way they can take advantage of them. The more you know, I guess. Signing off, and I want to say thanks again for watching the full video. Any questions, feel free to reach out. Thank you.